Hey, everybody. This is Tom Bowley, Chief Market Strategist at earningsbeats.com. And thought I'd go over some of the things I look at during bear markets. Now, what you have here on your screen is a long-term chart of the S&P 500. This goes back all the way to 1986. It is a daily chart, but I'm not really focused on individual days. I just want to give you some basic concepts, things that I look at and consider when we start moving into bear market territory. First of all, if you look at the PPO, the daily PPO of the S&P 500, and again, this goes all the way back to 1986. So in 1987, during the crash, you could see the huge move down in the PPO. Also in 2008, you can see the same thing. And then just recently here with the coronavirus, we've seen this PPO move down into territory that we really had not seen before. And it just tells you the acceleration and the quickness of this move to the downside. It's really been unlike very many other periods in our history. Now, looking at a bull market versus a bear market, when I see the S&P moving higher like this, and again in 2009 to 2020, generally what you see during these periods is support on the RSI down around 30. Normally we don't go down too much below that. You can see a couple of these high volatility periods where we saw the RSI quickly move below 30, but you can also see most of the moves outside this 30 to 70 range were to the upside. So that gives you a little bit better feel of what's going on in terms of a bull market. When you look at the bear market periods, 2000 to 2003, 2007 to 2009, and then again recently, what you'll see are these big drops down below RSI 30. Now, the problem with RSI and the problem with the PPO is they're both trend following. So they're always telling you what just happened. The beauty of sentiment indicators, in my opinion, is that they're actually looking at the fear, because once you get to a certain level of fear in the market, a lot of technical support levels don't seem to work. You're looking at charts and they just go right through support, which is unusual because in bull markets, we're not used to that. But as you make these moves down and you start breaking support levels, what I look for to at least begin to assess maybe a bottom in a bear market is I want to see extreme readings or extreme sentiment readings. So look at the volatility index. Now, what I've got here is a volatility index. It's an invisible chart where all you're seeing is the 5-day moving average. And I did the same thing with the equity-only put-call ratio. Now, the VIX, you can see, started in 90. The equity-only put-call ratio was in 2003. But if you look at the major bottoms, bear market bottoms, look at 2002, 2009, and check out the readings that we were getting. So here, 5-day moving average of the VIX went up to about 40 back in 2002. In 2008, it went up, 5-day moving average went up into the 70s before we finally saw a bottom go in. And in fact, on this last bottom, we were still fearful, but you could see the fear coming down. If we fast forward to where we are right now, you can see that the S&P 500 has been under a lot of pressure to the downside, and our 5-day moving average on the VIX is up into this range. Now, are we at a bottom? We could be. I think it's probably still a little close. When we look at the equity-only put-call ratio and take a look at the 5-day moving average there, you can see we just set an all-time high, or at least since 2003, we had the highest 5-day moving average in our brief history here, 17 years or so. So the point here is that as we're moving down, I know it's very fearful, and you think, wow, this is just the start. But I would point out to be a little cautious about that way of thinking, because when the market gets this fearful, that's when we typically begin to see major bottoms form. So let's keep an eye on the market. Let's watch these sentiment readings and see if the PPO and the RSI later don't confirm what these sentiment indicators are telling us now.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.